Just a couple of slides, and I'm hoping to cover the rest as we talk through the conversation. For anyone who doesn't know GC, we are the flagship special chemicals portion of PTT. PTT owns about 43% of GC, the rest is publicly traded in Thailand. Quick overview on the PTT itself, right? I'm not going to go into all the details, but about a $28 billion euro market cap entity. You see across multiple verticals. We have our own EPC, we have our own drilling, we have our own construction, a lot of investments in alternate energy. We have logistics, ships, you name it, right? PTT is pretty large. And going into I'm going to skip these just to take you to one specific slide that I wanted to cover here. GC itself has about a $6 billion market cap. When we did this, we had not made our large acquisition, which was done in 2022. We bought a $5 billion coatings company called Alnex. So our strategy, which we'll cover in the Q&A, we are based in 3 divisions in GC. A base chemicals portfolio, which is most of our refining business. A value-added portfolio, which is most of our plastics, HDPE, PET, and then what we call an international business. The international business is managed out of Houston. We have built out our second home here in Houston. The idea is over the next 20 to 25 years, our leadership has committed to significant decarbonization of our business. With that effort, we clearly see our base chemical business not being very profitable as we try to decarbonize. So the switch in portfolio to value-added high-end specialty products, which is what the international business manages. So 3 target areas for us: coatings, engineered plastics, and bioproducts. Coatings is what we have made 2 acquisitions in. Roughly today about 450 million in EBITDA through those acquisitions in that business. Engineered plastics is something that we are actively looking for M&A in. And then we have 3 to 4, depending on how you look at it, investments or JVs in the bioplastic space. We own NatureWorks, which is in the PLA space. We have an investment in Emery, which is in the oleochemical space. We have a PBS investment with Mitsubishi, which is looking into getting into another biodegradable plastic called PBAT. And then we have our own biodiesel, glycerin, as well as polyol business called GC Polyols. So kind of 3 to 4, depending on whether you think biodiesel and all that fits into this platform or not. But overall, pretty large in Thailand. Outside of Thailand, we are mostly through these kind of acquisitions in international businesses. The last one that I wanted to cover is this slide. Is we pride ourselves on sustainability. Most of our portfolio companies are EcoVadis Platinum. GC itself is trying to get to EcoVadis. We use Dow Jones Sustainability Rating, and we have been number 1 consistently for the last 3 years on the DJSI. And eventually we are just discussing, because all our portfolio companies are EcoVadis and we are Dow Jones. What do we do? Whether we get everybody onto Dow Jones or go EcoVadis across. So, like I said, significant investment. The management has committed to 50 billion over the next 25 years going into just sustainability and decap. And that means the portfolio has to really transform to be able to generate that kind of earnings. And that's why the international business exists.
Thank you, Srini. We'll start with you. So that's a helpful introduction. So you mentioned that some of the investments that you're making here in North America are driven by this desire to kind of shuffle the portfolio towards a more... To shuffle the portfolio towards a more, I guess, sustainable future. but you're also pursuing your cracker investment in Ohio. So I guess what's the overarching strategy for the North Americans?
So if I can just, it's not just North America, right? There is a 3-step strategy, very similar actually to one of the previous presentations, right? When you think decarb for us, we think there is an easy part which we put under step change for us, which is improve the base business and the performance in Thailand, right? So which is on the first step, which is how can we focus the business, how can we really take costs out of the business, how can we get the labor pool to be fit for purpose, and can we really look at cost synergies, best in practice, operation capabilities, right? Then the second opportunity is to really enhance the profitability of the business, which is where the step out strategy comes in and where North America and Europe come in, right? That is where our acquisitions, this cracker project in Europe, there was a question for you from you before, why US? Is it just the energy or raw material, right? In our thought process, US offers not just the energy, but a talent pool as well that's unique in terms of specialty industry. In Thailand, we do not have that talent pool. So the idea of a Western footprint and a second home in US is also that access to that talent pool that we then want to kind of get that know-how, how to manage a business, how to run a specialty business, because we've been so good at our base business and plastics business, but we do not have the know-how of that specialty. So the home in US is mainly to build that, right? The cracker project is still active. COVID kind of derailed that project for us. We are having to redo some of the engineering on that project because costs have totally changed from when we finished our engineering. We have reactivated and we have a partner that we're working with again, and we are going through the process. In the meantime, in Ohio, just because we have the land and we have to do something, we have announced the mechanical recycling project, which should come online in 2024. Where we have built a mechanical recycling in Thailand. It's online this year, about 40 kilotons. So we're going to make a similar plant put a similar plant in Ohio for plastics recycling. So out of this step out strategy, we are mainly looking at 3 portfolios: coatings, engineered plastics, and bio, which will be managed out in the step out strategy. And then the third one is anything to do with mechanical recycling, chemical recycling, or decarbonization. So we are looking at a project to capture CO2 and sequester in Texas. We are looking at cap and trade potentially here, and also looking at through my venture capital. We have a venture capital arm as well, so we're looking at startup technologies that can really either CO2 to chemicals or CO2 to protein, CO2 to other useful materials, so that we at least get a neutral EBITDA from our decarbonization.
Srini, so the 3 focus areas for PTT GC outside of the ethylene cracker are coatings, engineered plastics, and bio-based polymers or bioplastics, right? So I guess how did you settle on those 3 areas? What are the underlying drivers for that?
So for us, it was a pretty drawn-out process, right? We actually went through, we classified the entire chemical segment into 52 subgroups, and then walk through certain criteria for us. Part of it, right, our base business, if you look at it, has about 8% EBITDA. When you decarbonize completely, that's a negative 1-2% EBITDA. So you lose about 10% EBITDA if you 100% decarbonize your business, right? There is about 30% of any chemical company's business that through optimization you can take the CO2 footprint out. But as you get to the later stage, in the last 30%, it is really deep negative in EBITDA. So our view, long-term vision was we wanted to maintain that 8% EBITDA, right? Even with 100% decarbonized business. That meant we had to get businesses which are 15+% long-term growth, right? And so we took those 52 sectors and then started narrowing it down. there were certain areas where we had expertise in, which kind of ended up prioritizing, right? So if you look at it, there was agrochemicals in there, there was nutraceuticals in there, which we had no footprint in. But if you look at PTT, they are playing there, right? So for GC, it might not have been a direct overlap, but PTT realized that there is something there, so they have picked it up instead, and it might end up that if they're successful, they'll push it back into the GC portfolio, right? For now, bio was something that we always played in. The NatureWorks JV has existed for a long time. Recently, like this month, we announced the expansion in Thailand. So we just are doubling the footprint of our PLA production. We have had this Mitsubishi JV for a long time, so green bio has been clear for us. But right now, this year 22, we finished our strategy on what we want to be when we grow up, right, in the green bio. But coatings, we had a Vencorex JV for 10 plus years the first time we went in, so it was something that we had been building up capability in. So the Alnex acquisition in early 22 made sense for us. We continue to look at engineered plastics. The valuations are pretty heavy. So when the right opportunity comes up, we might jump into engineered plastics as well.
Yeah.
But we do have a JV with Kurare for a polyamide. So we are building up know-how even there.
Okay. Yeah, so that was the next part I wanted to talk about, is like, you said that you're looking for deals in engineered plastics, but it's not a super liquid space. There's not like a ton of companies to go after. Are there particular engineered plastics that you are more interested in versus the others?
They are, because we do look at a few, right? I was talking to one of our colleagues here. Acetals was interesting. We looked at Celanese quite a bit, mainly because of the CO2 that is used and the decarbonization potential. We look at peat quite a bit. We have, between our portfolio companies and GC itself, we have a huge footprint into 3D printing. We have multiple alliances and JVs, what we call prototyping, right? But within GC, we call it 3D printing, and PLA is a big component in 3D printing. So NatureWorks is very active in it. Emery actually has a lot of polyols that go into metal 3D printing, which we said medical, right? We were only looking at polymer space here, but a big portion of it is also metal into medical application, your crowns and teeth. So we have a footprint there. Vencorex is in polyurethanes, and so they have thermoplast TPUs, and they have a play there. So within our portfolio, we have a lot of exposure to 3D printing. So for us, things that would reinforce this, like PEEK or some specialty polyamides, are definitely attractive. We looked at the DuPont, well, $11+ billion is too big a ticket for us at this point, right? And the valuation and the multiples are a bit of a challenge for us. But for the right one, we would jump in.
Yeah.